Here is the question that matters this Friday the 14th of August. Why is euro to pound sterling, one of the most actively traded currency pairs in Europe, barely moving? The pair has spent the entire session locked in the mid-0.8500s, essentially flat on the day, even as traders watch a war unfold. That is not normal behavior for a market digesting a geopolitical shock. Normally a war headline would force a sharp flight to safety. Instead, the euro and pound are canceling each other out, because both currencies have a reason to stay firm. The euro is supported by sticky eurozone inflation that keeps the European Central Bank cautious. The pound is supported by expectations that the Bank of England will keep rates higher for longer. That is the core tension. The recent data explains why neither side can take control. Eurozone inflation remains sticky enough that ECB policymakers are reluctant to signal aggressive easing. That puts a floor under the euro. At the same time, market expectations for the Bank of England are anchored by a higher-for-longer rate profile, which keeps sterling supported. You can see the stalemate in the Bank of England's July decision. The vote was split, with 3 of 9 Monetary Policy Committee members breaking from the majority. That division tells traders the bank is not about to cut aggressively, but also not tightening. The result is a pair stuck between two cautious central banks, with neither currency able to build sustained momentum. The war adds another layer. Traders are not using the conflict as a reason to bet on direction. They are using it as a reason to reduce exposure. When headline risk rises, spot traders widen their bid-offer spreads and cut position sizes ahead of the weekend. That reduces liquidity, which in turn prevents any breakout from gaining follow-through. So even though the euro has a bullish technical bias against the US dollar, with support near 1.1500 and resistance around 1.1580, that dollar-side strength does not translate against the pound. In euro to pound sterling, the war anxiety simply reinforces the existing range near the 0.8540 zone. It is not a trend signal, it is a liquidity squeeze. Looking ahead, the pair needs a fresh catalyst. The current equilibrium will not last forever, but for now neither central bank speech nor war headlines have enough force. Watch the 0.8540 support area and the upper mid 0.8500s as the immediate battle lines. A clean break below would require markets to price in more aggressive Bank of England easing, or a sharp drop in eurozone inflation. A break higher would require evidence that the European Central Bank will hold rates longer than the Bank of England. Until that evidence arrives, euro to pound sterling is likely to stay in a tight range, with momentum traders frustrated by repeated false signals. So the takeaway is this. Euro/GBP's tight range is not indecision. It is a temporary equilibrium between sticky eurozone inflation and a higher-for-longer Bank of England, all under the shadow of a war that makes traders afraid to commit. The pair is telling you that neither currency deserves a decisive premium right now. Until the rate outlook shifts, range trading, not trend following, is the smarter approach. This is not the time to force a breakout trade. Instead, treat the range as the trade, set entries near support, exits near resistance, and wait for a clear central bank repricing before changing that view.